Hi there, it's Bill with Smart Trades, Sunday, August 29th, and it's about 3:45 p.m. Going to take a look today at 1987 again and look at what we can learn from that and perhaps see what was missed back in the day when folks were looking at this from an Elliott wave perspective. My personal opinion looking at Prechter's count back in 87 was that he basically analyzed the market as perfectly as you can get. He just couldn't see into the future, basically. He was off by 1 degree of scale. One point of note here, this X point in the chart is a possible location to where we are right now in terms of following a fractal relationship to the 1987 crash. So important to note, there is potential to the downside, and it's not beyond the realm of possibility that we're going to see a replay of 1987. So taking a good close look at these charts might not be a bad idea. I don't necessarily favor that we are going to follow the 87 pattern, but so far we have. So far be it from me to not follow the market, and more on that later. But first, let's look at the situation back in 87. And again, as I talked about before, basically Prechter was looking at the market declining down to around the 2200 level, and he was expecting a 1.62A relationship at that point in a previous fourth wave. Well, that worked out, and then some. The point is that the market went all the way to the next fourth wave of lesser degree, as it were, and in other words, Prechter was off by an entire degree of scale. That said, without a crystal ball, I certainly don't hold it against him. Indeed, he was out of the market and had said to sell stocks right up here around the 2640 area before the decline. In my opinion, it was a great call at the time. Again, where he went wrong is he was looking at the market from 1 degree of scale too small in terms of the corrective decline. And after that, he determined that indeed this was the beginning of a bear market. Let's go on to the next slide here. And in fact, back in 87, Prechter proclaimed at this point, I think it was October 22nd or so, that given the decline, this was the beginning of a grand supercycle bear market, given the extent of the decline and the position of the wave structure and so on and so forth. Obviously, in retrospect, that he was off not just by 1 degree of scale, perhaps several, and the market has gone up since. An interesting point of note, back here in 87, there was a lot of talk in the news about a so-called room temperature superconductor. Basically a technological breakthrough that would allow energy to be transmitted without resistance, reduce the cost for things like batteries, solar energy, you name it. As it turned out, the so-called superconductor never came to pass. Nonetheless, just about that same time, there was a technological breakthrough that was percolating in the background. And if you look at the market, something rather dramatic happened here around 1995 or so. Something was driving this market higher. And, I don't think too many folks really fully understood what was happening. Certainly back in 87, no one knew that the internet was going to become as big as it would. Just a little note on the internet's growth from from 1995 there were 16 million internet users. In 2010 we're going on 2 billion and growing. This is a chart of internet hosts from 1981 to 2009, and again, look at this takeoff here around 1995, and the market, the internet host, count going straight to the moon. Recent stats show that the internet economy is at $10 trillion. That's $10 trillion. It's just a pretty staggering number. And when you look at the scope of the market, you look at this chart, I mean, what is the driver here? Well, I think it's the internet. You look at the charts, And see here in 95 where the internet took off, that's indeed where the stock market took off. And although we've had a serious correction, I think the growth of the internet and a variety of things connected to that are really what is still driving this market, and may indeed mitigate a lot of the uh, damage in terms of structural debt and so on and so forth. Um, at any rate, one last thought too on the internet. You know, my son just went off to college, and he was born in 1992, and he's a member of the so-called net generation. And these kids have, you know, never known a world without the internet. And I think it puts them in a somewhat unique position. Just like a, you know, so-called superconductor transmits energy without friction, basically what the internet has done is it's transmitting information without friction. Back in '87, when Prechter was sending out his newsletter, he had to actually print copies, put them in the mail, wait for them to be hand delivered. We weren't even getting faxes. We had to call in if we wanted a consultation and so on and so forth. It's pretty incredible when you look at the market and you think about the changes that have occurred since '87 or so, and the internet is the driving force. Anyway, the whole point of this whole net generation and so on is these kids have access to information in a way that you know, we couldn't imagine as kids. Those of us that were adults in 1987, that is. And to my way of thinking, although everybody thinks that the younger generation is, you know, is not hardworking or whatever, I think that's quite incorrect. I think they're as hardworking as any generation that I've seen in my lifetime, and I think that the advantage that they have, basically access to information with a couple of clicks of a mouse, is going to eventually pay dividends beyond the so-called internet commerce and the internet economy. I think that ultimately technology is going to benefit, and we may be looking at the sort of the second wave, as it were, of the internet. Not just an increase in commerce and productivity, but perhaps a technological breakthrough as the net generation you know, goes into the world. Anyway, that's just a quick thought, obviously theoretical. Just one last look too again at the fractal of the Dow. Again, this is '87. You can see what happened. Here we are in 2010. We're following that fractal to a T. Here they are side by side. The rally back before the crash in '87 was about a 66% retracement. The current retracement is about 64%. We have very similar patterns after the first three bars down, and again, our current decline, the fractal, is on a weekly scale rather than a daily scale, so the potential impact to the downside is quite significant if we continue to follow this pattern. I'll have a report a little later and discuss it, but I don't think we are going to continue to follow it, but as long as we do, I certainly would respect it, and I certainly wouldn't fight a down draft that starts here over the next several weeks. That's it for now. Hope you're having a good one. So long.